Hey guys, Joel Frank here, market analyst for YouTrading, and this morning we're taking a quick look at the S&P 500 because this week we've seen this really quite incredible surge in US equities. Let's take a look at the chart here and I will talk through with you what's been going on. This is the S&P 500, 4-hour candlesticks. Just to recap recent price action. We've been in this downtrend, or we were in this downtrend from sort of the end of November, the last week of November, for about 2 weeks through until really the start of this week. Why? Well, obviously, as we've been talking about for, over this time period, the emergence of this new COVID variant, the Omicron variant, triggered a lot of worries. Basically, this variant was far more transmissible. And there were fears that, it's going to spread around the world. It's going to trigger a surge in hospitalizations, which is going to trigger lockdowns, which is going to push up inflation, whilst also weakening the economy, like stagflation type things. And generally, that would just be terrible for the outlook for like corporate earnings, which is why we saw this kind of panicky downside in the S&P 500. But we've seen this sort of trend of fear snap in recent days, and as you can see, this downtrend, or this downwards trend channel, well, we broke above it on Monday, and the pace of gains has accelerated even more on Tuesday. You can see that we're now close to 4,700 again. We're now back in line with pre-Omicron levels, back above the 21-day moving average here in the orange. Easily back above the 50-day moving average here down at 4,050. And it just looks as though the reason we've had this rally is, you could probably trace it to comments from US infectious disease expert, the famous one, Dr. Fauci. Over the weekend, he was talking about how it doesn't seem as though Omicron has, I forget his exact wording, but he said something like it doesn't have a great degree of severity. But basically, there's all this evidence is building up that, yes, Omicron, more transmissible. Yes, there is going to be some immune escape as well. That was another worry. But the severity of symptoms associated with infection is increasingly looks as though it's not that bad. So you're going to see, this is, fingers crossed, this is what markets seem to be pricing. You're going to see Omicron spread all over the world. It is going to cause problems, but it's not going to cause the drastic spike in hospitalizations, perhaps that past waves of coronavirus infections have, like the most recent Delta wave, or the current Delta wave that you're actually seeing in Europe. But anyway, it's been a bit of a melt up. It's quite an emotional market. When things start moving higher like this, just as when stocks start dropping very quickly, people go and sell because they're scared if they don't sell now that they hold on, they're going to sell at an even lower price. Well, now we've been getting a bit of FOMO, people thinking, oh, maybe I missed the opportunity to buy the dip, so now they're just piling in. But the fact that we've seen this rally back to pre-Omicron levels, I would say that the Santa rally is back on the table. A lot of people were writing off the Santa rally, just like this time last week when we were down here around 4,500. But now we're back to 4,700. I think as long as the news regarding Omicron remains, broadly in line with it's not too severe, we could see a retest of these highs and perhaps even a move beyond them, because like I say, there is typically a Santa rally heading into Christmas, a lot of good vibes in equity markets. But in the immediate future, we've got US inflation numbers coming up at the end of the week, ahead of the Fed meeting next week. Markets do expect them to announce an acceleration of their QE taper. That shouldn't knock equity market sentiment as long as investors remain confident that in the underlying strength of the economy, right? It's when they start to doubt the strength of the economy, but then the Fed continues to reduce monetary stimulus anyway, that's when it's like, we want you to be dovish to help us. But as long as investors are confident in the recovery, which they seem to be right now, then they're probably going to be happy with the Fed's slightly more hawkish policy. But guys, hope you enjoyed the video, and I'll see you all in the next one.